Alright guys, so welcome back to the channel. Now, did you know that top-down analysis is very simple and easy to do? And that is exactly what I want to show you in this particular video. If you are new here, my name is Solomon King, and I just want you to give me your time and I will make you a professional trader within the shortest time possible. So let's go into it and I will show you exactly what to look out for when you're doing top-down analysis. This is gold. I want to start from the higher time frame and then I'll go down to the lower time frame because that's exactly what top-down analysis is all about. Now, as an intraday trader, there are two higher time frames you should look out for. You select one and then you continue from there. You can select either the daily time frame or the 4-hour time frame as your higher time frame when you're doing top-down analysis. But then for me, I'm not saying this is an industry standard. For me, as an intraday trader, I select 4-hour time frame as my big boy time frame or my higher time frame most of the time when I am taking trades. So you can take the daily if you wish, or you can take the 4-hour time frame. It's almost the same thing. The price action is not having that much disparity. So let's go into it. Okay. So I will start from going to the 4-hour time frame, and there are some basic things I need to tell you whenever you're doing top-down analysis. Now, there are two things about your charts. There is the left-hand side of your chart, and there is the right-hand side of your chart. You must not ignore any of these. What is happening on your left-hand side is equally important as your right-hand side. Please write this if you're not writing. So, if that is the case, if I look at my chart now, I will have to look at what is on my left-hand side. And there are two things you will always find on the left-hand side of your chart. What are they? Number one, liquidity. In simple term, draw on liquidity. Number two, institutional reference point, IRP. Institutional reference point. Number one is liquidity. In other words, draw on liquidity. And number two, institutional reference points. What are institutional reference points? Such as your order block, your fair value gaps, your breaker blocks, your mitigation blocks. So if you look at your left hand side, you will look at it very carefully and check what is the possible institutional reference point or liquidity area that price will go to. For instance, on this one, from a 4-hour time frame, we saw that price has broken structure bearish. I'm teaching you how to do top-down analysis here. Break of structure. It's a trend continuation. It started right from here down to this area. So what is on my left-hand side? Before it came there, I have a draw on liquidity. You see why I'm saying you must not ignore your left-hand side. Draw on liquidity. Very important. Now, aside from this draw on liquidity, I have another draw on liquidity here. Aside from that, I have another draw on liquidity here. And I hope you know that it will take price so long before it finally finishes with this draw on liquidity. So you will start taking it one after another. It started from taking this guy to this guy, the major points at least. And then I am at the current one. Now this is how price behaves. Every time price reaches a draw on liquidity, it will take time and rest. And that rest is going to come in form of retracement. So if price moves from here, takes out this, rest. Takes out this, rest. And the rest is always going to target a particular institutional reference point as it retraces back into an area. So now I am done with the 4-hour time frame. What does the 4-hour time frame gives you? the possible areas that price will trade into, or the places that price has already traded into. That is the only thing you need the higher time frame for as an intraday trader. And let me buttress on this. Most of you guys think whenever we talk about being an intraday trader, you think it's all about taking trade every single day. No. An intraday trader is simply a trader that patiently waits for the best trade setup in a particular day. If it is there, he takes it. If it is not there, you let it be. So please take notice of that. So as you finish that, let's go straight to the next point. So we are now going to drop down to the 15-minute time frame. As an intraday trader, you cannot ignore the 15-minute time frame, especially if you are selecting the 4-hour time frame as your higher time frame. The next time frame is straight down to the 15-minute. Or if you are selecting the daily time frame, the next time frame is the 1-hour time frame. So this is the 15-minute time frame. Now I will do market structure delineations on the 15 minutes. That is the only thing I need the 15-minute time frame for. So I will say from here I have a break of structure bearish. Beautiful. This will give me the micro progression of price, break of structure bearish. Price had this range from here to here, right? And then price traded back into this fair value gap, and then boom. I am supposed to see price creates a new low. But because I have already traded into the draw on liquidity on the left hand side, price will seldom do that. Instead, price is going to just have a failure swing. Now I will patiently wait for a shift in market structure, because I told you that price is obviously going to target somewhere inside here. Now going back to the 4-hour, let me show you. Where do you think price is going to come back into? As it goes back, the first point is going to be this fair value gap that is unmitigated. Why this fair value gap? It is simply because right inside it there is a low resting. So this area becomes a very powerful area for price to retrace into. So in the order of preference, there are two things that will happen. Price will either continue bearish or it will come back into this guy. Now let's give it percentage, because it is always in this manner. The percentage is this. It is very possible that price is going to go down and continue the movement. And it is also possible that price is going to come back into at least 50% of this fair value gap. What are the percentage chances? Here is 70% that price is going to go up. And then if price is going to go low, I will give it 30%. So this is how to do it. The chances that price is going to go back up is 70. And the chances that price is going to go low is 30. Why? Because I am done with the draw on liquidity, resting on the higher time frame. I need to rest and continue. So as an intraday trader, the movement from here to here is enough for me on a day. If I can catch that, I am very okay. Or you can be patient when price finally comes here and continue down with the original buyers. You are basically looking at it as a counter trading perspective. So guys, let me quickly introduce you to FastBull. FastBull is an amazing platform. One of the things I love about FastBull is their chat platform, and that is exactly what I want to show you. Use the link in the description of this video. Come to fastbull.com, go to products, and you will see charts. If you know how TradingView is, this is exactly like TradingView. The only difference is that this is free. Almost everything is free for you to use. An amazing platform. One of the things that stood out for them is the tile window. You know how you can tile up different charts across each other. If you're doing correlation trading, this is absolutely amazing. And you see the comment sections where people are asking questions, and then people are getting responses from that. So you can check fastbull.com. The link is in the description of this video. Please don't hesitate to check and visit, and then use the platform. It's absolutely free. So coming back to our charts now, let me take this opportunity and show you why I consider this price to go bullish for today or even till tomorrow. And then the percentage is 70%. 70%. So if I go back to the 15-minute time frame, now you will see the reason why I considered that. Oh, it has already done what I'm saying. I have seen this. This entry was what I wanted to take, and it has already worked for it. So when I saw price had this, the market structure shift that I'm waiting for happened here. Price had a retracement 1, 2, 3, 4, almost 4. Look at the market structure shift. Price broke structure bearish, retraced up, had a failure swing, went up, came back down again, and it now shifted structure here. This is the kind of shifting structure I'm looking for, with massive displacement. And what else do? I saw this happening just this morning. Let me show you that. This particular shifting structure that came in massively, I saw it this morning. Look at this. Look at this. Shifting structure. Here, it went bullish. And price went into this area. Now it's retracing. The target is ultimately to take out this high. You can also wait for price to finally take out this high. It has lesser risk approach to the bullish bias that I'm intending to do. And where is my target? Just here. That is the target. So as I saw price did this, I was looking at this fair value gap on the downside of price, and price did not hesitate. It traded right into it here. You see? Right into that guy. You could look at this and say, oh, how about this bullish order block? No. If you are taking the trade, you must take the trade with lesser risks than you can get. So your stop loss is obviously going to be below this low here. That is how to do it. If you were to take the trade, you will take the buy. It has already started. I wanted to take the buy, but then I don't know what happened. It just quickly traded. Before I started the video, I didn't know that it will trade into this area. So this was my bias. And I was going to target where? Here. This is the top-down analysis. That is the top-down analysis I was waiting for. This is one pattern of taking the trade. Another way of taking the trade, now that I have missed it, I will still take it, but then I want to see price close above this guy. All right? That is another market structure shift bullish. If I see price closed above this guy, something like this, boom, and then it will leave me with another institutional reference point, I will still take it. It's not late. I will still take the trade, but then it's going to be here, and my stop loss is going to be here. So if you missed the first one, you can wait patiently for the trade setup to come in massively. This is the 5 minute. I just used 4 time frames for this. I used the 4 hour. I used the 15 minutes. And now the 5 minute is my entry time frame. As simple as that. So if you want to catch the big moves, that's how to go about it. Your target is obviously the middle of this. But then you shouldn't forget that at every moment, if price breaks above this, I can go to break even so that I will be running on 0 loss. Or you can look at this guy. The moment price breaks above this guy with the body of the candle, you can just go to break even and watch price play out. Let me clear it so you can see it very clearly. So price is struggling because of this fair value gap, but you will obviously see price trades into it massively and then shift structure. The second opportunity for entry is going to come after this shifting structure, and then I will take it. I'm watching it, but then I'm being patient a bit so that I can see how powerful it is. As soon as price reaches this area, I will close some profit. It's better because price has potential of always returning back to remove you if you're not careful. So I will wait for price to take out this high, and then I will shift my stop loss to break even. So that's as simple as that. Top-down analysis, straightforward, without wasting time. As simple as that. Straightforward. The left-hand side, the right-hand side, and then you take your trades without hesitation. For those of you who want to sign up for my mentorship, there is a link in the description of this video. You can find the website, the Elite Traders Program, where I teach this almost every day without hesitation. So guys, see you there as you join. Thank you very much.